Budget 2021 is founded on these three main themes: ensuring healthcare is resourced to deal with the pandemic, positioning the economy for recovery, and ensuring that we're delivering government services most efficiently. The key fiscal metrics for the 2020-2021 Q3 forecast, and I want to state that this forecast is for the current fiscal year that we're in today. So this is for the fiscal year that ends in 5 weeks, on March 31st, 2021. Revenues are projected to be $42.3 billion. That's $900 higher from our mid-year forecast. Non-COVID-related operating expenses are forecast to be $47.3 billion. That's $500 million lower than we predicted in budget. In terms of our COVID costs and economic recovery costs, we're expecting those to come to $5.8 billion. And again, that relates to two things, both our health care response as well as our response for economic recovery. $2 billion relates to health and personal protective equipment, and $3.8 billion relates to economic relief and recovery. We're projecting a $20.2 billion deficit, down from a $21.3 billion deficit in mid-year, and down from a $24.2 billion deficit that we forecast in Q1. Now I want to turn our attention to our upcoming budget year. In 21-22, we will continue to focus on fighting the pandemic and economic recovery. We're expecting a modest increase in revenues, an approximate increase of $1 billion in operating expenses, which will include an increase of $900 million for health. Other expenses are expected to increase by $800 million. This is due to a $400 million increase in debt servicing costs and a $400 million increase in capital grants. On the economic recovery side, we're projecting a $1.1 billion spend to ensure that we can provide economic relief for businesses and to ensure that our sector strategies are properly funded and resourced. We are also setting up a $1.3 billion contingency for health, and that will ensure that we can continue to resource our healthcare effort in the face of a pandemic. We're projecting a deficit of $18.2 billion for the upcoming fiscal year. The out-year revenues are modestly improving. They're improving by just under 8% per year. And with operating expenses remaining largely flat, our deficits will be reducing. We're projecting an $11 billion deficit and an $8 billion deficit in 23-24. And I want to state one thing. There are no new taxes or tax increases in Budget 2021. In terms of health care, adequately resourcing health care is our #1 priority in Budget 2021. The Department of Health's operating budget has increased by $900 million, or 4%, from the last budget to $21.4 billion. This increases to $23 billion if amortization and inventory consumption is included. And I want to say that this increase is going to be reflected in each of the fiscal years for the duration of the fiscal plan. This funding is required largely to reduce a backlog in surgical wait times, as well as the delayed implementation of a number of AHS recommendations, and these were delays due to the pandemic. Over $3.5 billion will go towards continuing care, community care, and home care programs, an increase of over $200 million from the 2020-21 forecast. The Budget 2021 investment in healthcare continues our commitment of $140 million over 4 years to improve and increase access to mental health supports, which will be so important following the pandemic. And we're setting aside $1.25 billion specifically to fight COVID-19. Alberta's government will also spend $143 million building new healthcare facilities over the next 3 years. This includes $35 million for the new Lacrete Maternity and Community Health Centre. The centre will provide integrated ambulatory care, primary care, maternal health care, and diagnostic services to Lacrete and remote communities in the area. Let's go to the next slide. Economic recovery is a critical priority in Budget 2021. In 21-22, Alberta's government will spend an additional $3.1 billion to support that recovery. This will include $1.5 billion over 3 years on strategic investments in key economic sectors. This funding supports job creators directly affected by the public health measures, supports job training and skills development, which will be so important in economic recovery, and it funds specific sector strategies such as technology, tourism, aviation, aerospace and pharmaceuticals, energy, financial technology, and agriculture. To help ensure Alberta can address any new challenges in the upcoming year, the government has set aside an additional $500 million for further economic recovery initiatives and to fund sector strategies that are currently being developed. The government has also added $1.7 billion to the capital plan for 21-22, and this is over and above what was committed in Budget 2020. Let's turn to slide 6 on the capital plan. The capital plan remains a key element of the government's recovery strategy. In total, the 3-year plan amounts to $20.7 billion, which is an increase of $1.7 billion from 21-22. This funding will support more than 50,000 direct and 40,000 indirect jobs through to 2024. Municipal support accounts for the largest portion of the capital plan at 33% or $5.9 billion. Capital maintenance and renewal makes up the next largest portion with $3 billion over the course of the plan. That's an increase of nearly $300 million from Budget 2020. The substantial investment will support jobs immediately while building the roads, bridges, hospitals, schools, and other public infrastructure that are so important in our communities and to the job creators who move to these communities. At the same time, it also minimizes the need for more costly repairs or replacement infrastructure in the future. I do want to say that our capital plan is critical to economic recovery. We are really looking to prioritize projects that will improve our competitiveness and productivity, projects that will attract additional private sector investment and position Alberta's economy for long-term recovery and growth. I want to turn to the next slide, which is fiscal anchors. In Budget 2019, we presented a credible fiscal plan, a plan that got us to balance in our first term. Unfortunately, COVID and the economic fallout has significantly disrupted this plan. And during this time, when we're unable to project a timeline and path to balance, fiscal anchors will be very important to inform our financial decisions and ensure that we're positioned for fiscal recovery in the future. Our number one fiscal anchor is to ensure that the government can live up to its commitment to keep Alberta's net debt to a GDP ratio below 30%. By the end of this 3-year plan, the ratio will be 26.4%. Measuring net debt to GDP is a reliable way to calculate Alberta's ability to pay back its debt. Second, the government is determined to deliver services most cost-effectively, given that the McKinnon panel pointed out that Alberta has historically spent more than other provinces. And third, the government remains committed to balancing the budget. We will set a clear time frame for getting back to balance once the pandemic is over and we have economic clarity. Let's turn to the next slide. A key fiscal anchor is aligning our per capita spending with that of major provinces. Budget 2021 will bring Alberta's spending levels in line with that of Canada's largest provinces, moving us into an even better position for success as the economy begins to recover. Major undertaking to put the province under a sustainable fiscal trajectory is really the purpose of this fiscal anchor. Let's turn to the next slide. We live in a world of much economic uncertainty. This past year has demonstrated the amount of uncertainty a province could face. With the recent run in energy prices, I want to be transparent with Albertans on both a low and high scenario. A number of assumptions are interrelated, including our WTI price, oil price differential, and exchange rates. And let me talk a little bit about that. When energy prices rise, typically or historically are differential. The differential between the value of Western Canadian Select and West Texas Intermediate oil prices change. So that has to be factored in any kind of projection as well. When energy prices rise, typically our currency rises with it. And that has That has the opposite effect for Alberta government revenues. So we have significant interrelationship in a number of our fiscal metrics. In Budget 2021, we forecasted a WTI to be $46. That leaves us with an $18.2 billion deficit when we run all of the modeling based on a $46 WTI price. We presented in this fiscal plan a low scenario, a scenario where WTI is $39. That results, again, after all of the modeling, in a $20.1 billion deficit. And I want to talk about a high scenario as well. We're projecting a high scenario of $55 WTI to result in a $15.4 billion deficit. Now, while a variable WTI price will affect the deficit, it will not affect our priorities or decisions in Budget 2021. We're focused on what we can manage, and we are looking to ensure that we're prioritizing healthcare spending. We're looking to ensure that we're positioning the economy for growth and recovery, and we're looking to ensure that we're delivering government services most efficiently. As vaccines roll out, optimism and economic projections are improving. The recent increase in energy prices are a case in point. In 2020, GDP fell by an estimated 7.8%, and in 2021, real GDP is expected to grow by 4.8%, and then 3.7, 3.3, and 3.1 in the out years. Oil production, which reached record highs in late 2020 on the back of a strong rebound in bitumen output, is expected to lead growth this year. Ultimately, Alberta's economy is now expected to reach pre-COVID levels by 2022, 1 year earlier than expected in mid-year. Albertans continue to face one of the most difficult times in our history. Right now, this government is focused on our three key priorities, and Budget 2021 reflects those priorities. Number one, we're ensuring that we're resourcing our healthcare response adequately to meet the pandemic challenge. Number two, we're positioning the economy for growth and a rebound. And number three, we're constantly working to ensure we're delivering government services most efficiently.